Hey everybody, welcome. Mark Coe here for April the 4th, Tuesday. Nice quiet little day, but I wanted to go over some of the peak levels, what we've been looking at in the market and kind of how it's all played out. It's been quite nice in terms of level to level action here. So we'll start out with euro dollar. I'll just give you the quick rundown. Coming into this week, the analysis has been pointing to really kind of the term I've used has been maturity within this down move. And 655, I tell everybody I really look at zones, but I'll show you the zone I've been looking at on the bottom. I've drawn it to the 655, but it looks more like that 650 to 655 area. So this is Monday's action. Now you can see today, Tuesday, and it's played out well. And so the commentary I've used the last 2 days has said support should be strong on any approach, into 605, 640, and we saw it trade into 637 today. I'm sorry, 636 today, and rallied off of that level. So not surprising. This is what I've expected for the last 2 days. It's what's continued to go on. So it's played out really nice. And again, why I love these levels, why I like looking at it from a standpoint of what is the game plan, because you have a framework to work around. And this one has absolutely worked well, but it's been a tight market. So I still look for euro to be well contained and would look at any rally, especially if we were able to rally up to the 7.5 level. I would look at that as very attractive in the short term to be able to sell against and look for a break of this 106 level eventually. But right now there's just a lot of support as you approach 6 to 640. So we'll keep an eye on that. Currencies, dollar yen. So yen has strengthened the last couple days. We actually had a model position stop out. I thought it was going to be a lot more sizable, but sterling yen recovered a little bit during the day, but nonetheless stopped out of a sterling yen. And you can see why the yen has strengthened across the board. I came off this idea of wanting to buy dollar yen 2 days ago, and it just has not been supported the way you would have anticipated it being supportive if it was going to continue more of a bull tone. It wasn't able to do that. So came off this idea and waiting for a rally to be able to sell into. So the idea is that as long as dollar yen is going to be contained by this 1150, 1200 area, still going to look for another test and break of 110. The support last week was down right at that 110.15 area. That was what held it last week twice, and we rallied off of it. So don't expect a super easy give up of that level, but understand the kind of extremes of the range. And so there's nothing wrong with approaching it on a shorter term into those zones. But again, I just say proceed with caution because you're talking some pretty key areas if that breaks. Pound dollar. Pound actually played back into a level I really wanted to take a look at, this 24.45 area. So now the analysis in pound has been want to buy dips, continued to want to buy dips, and that's been the read in pound. Problem is it hasn't given us much dip to buy into, and as I mentioned earlier, we got a pound yen long on the model, but that was stopped out today. So that yen strength and the pound weakness, the combination just did not sit well with the model and was not able to stay in that. So it was a 1-day trade, stopped out, and that was the end of that one. So pound dollar right back into these levels. Now what I like to look at is, can you find buy zones within that zone? And so clearly taking a look at this area here on the bottom, it represents some pretty interesting value. Pretty tight, 2420. I think you can work that down to the 2400 level and still give yourself pretty tight risk, looking for rally back above 2550 in the short term. So that's why I'm going to continue to play the pound dollar, at least to look at it and analyze it like that, and we'll see how we continue to play out. Let's take a quick look at the futures markets, E-minis. How did I have this one pegged today? Well, had it still prefer to sell rallies as long as we see the 2357 contain. And that contained for the better part of the day, but we can see late afternoon it gave up. So it was capped by that all day. Those are really all the rallies you had to sell. It was pretty tight rangey stuff for the day. The best levels of U.S. session on the bottom were that 44 3/4, and you saw about a 10-point bounce, and that was it. So pretty tight rangey stuff in the S&P. And not much beyond that. Crude oil continues to impress to the top side. albeit some of the movement is a bit grindy and not giving a ton of buy side opportunity unless you want to chase top side action. So what you really have to be patient for, and we got it yesterday, we didn't really get one today, but what you have to be patient for are these dips. And so this was the dip. I guess I said yesterday, but it was early European trading, so we didn't have it during the U.S. session. We got the dip during U.S. session trading yesterday, but the dip overnight is where your buy zone was. Problem is, if you're a U.S. trader, you didn't have the ability to play into that. You had to take levels that were not nearly as good, which meant they were higher. So, it's an idea of having to pay up, and so it doesn't always leave phenomenal opportunities to join that momentum unless you're paying up for price. So I prefer to wait for that those pullbacks to be able to get involved. And by all means, crude still continues. It's been an impressive run. When you look at crude from the lows last week, and you think about how offered this crude market was, that's a pretty impressive move. $4 plus, or almost $4 in a week and a day. So you see the bid action continuing here in crude on a Tuesday afternoon, and closing over 51. So not a bad day. Anyway, that's what we had in the markets. I had crude pegged as long as we maintain support at 49.75, which was this zone we see in here. So this was the same analysis the last 2 days for both Monday and Tuesday. As long as we maintain that support, I wanted to buy dips. And again, that was the dip yesterday, but it didn't take you back to best levels. Those best levels were seen overnight. So that was the dip we wanted to buy into. That was the rally. And so my analysis said we can still see further gains up to 51.45. We didn't see 51.45 today. We saw 51.30. So just shy of that 51.45 target that I was looking for. But we'll see what happens on the next session. So as we approach Wednesday, that's what we've had in store. The model's continuing to perform well. As I said, we did give back a little in sterling yen, but what you love to continue to see in this model is the biggest winners outpace the biggest losers. And those losses happen at times, but we can live with them. So for Mark Coe, it is the 4th of April, and I will bid you all farewell. Cheers.